Last week, we saw some strengths in the dollar on the back of stronger yields, ISM and JOLTS. Now, gold also did go up, but it was start of new quarter, so you could assume it is pricing in of potential weaker labour market, but also rebalancing of portfolios. ADP was a huge miss at negative 33k compared to the plus 90k consensus. Now, ADP is one of the largest private sector payroll provider, and it did begin to show cracks in the labour market. So that did support more upside on gold. Towards the end of the week, NFP was a beat, unemployment came lower, so you saw downside on gold and potential unwinding of some of that pricing in. So focus will be on FOMC minutes to dictate whether or not the Fed is leaning towards a wait and see approach, or if they are looking for cuts. I personally don't trust the stronger NFP. NFP is a very unreliable indicator, so do keep an eye out on coming weeks' labour market data. But next week we only really have the FOMC minutes, which is a meeting they do 2 weeks after the rate cuts to essentially just review. So do keep an eye out on the Fed's stance, whether they are leaning towards a wait and see approach, if they give hints into potential cuts in July or September. Apart from that, it is relatively quiet in terms of the dollar, so do expect a tech driven market which is prone to potential risk sentiment.